Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex quick look at the euro versus US dollars. We head into the weekend in what was a volatile trading week for that currency pair. Taking a look at the weekly chart, if we go all the way back to the left-hand side of this chart, between the months of June to October, the market had swing lows between the 0.9762 to 0.9662 to 0.9708 level. The price this week moved below that level, reaching a new low for the going back to 2002 that reached to the 0.9535 level before rotating back to the upside. This is what it looks like on the daily chart. This is that swing area right here. The market fell below that level on Monday's trade, and Tuesday and Wednesday the price moved back to the upside. On Thursday we moved back below that level, but rebounded and closed higher. And on Friday we moved up to the 38.2% retracement of the move down from this high to this low right here. That's where the price stalled at the 98.53 level. Getting above that level would be somewhat positive for the euro versus US dollar in the new trading week. I also want to bring your attention to this area right here. Remember this box right here where the market was consolidating? It was a sister box to this box right here where the market was consolidated through here. And go back to that area and recall how the price moved up, went to the topside trend line here, found sellers, failed, and then started its way back to the downside, breaking below that box and moving our way all the way down to the low. Well, the high price this week came up into close to the top of that box, and so that increases this level's importance going forward. Get above the 98.53 level to 98.63. That was this low right here. Increases the bullish bias, puts the price back into this old box through here, and we'll see what happens from there. So just be aware of that level and of that resistance level that we moved up to in trading this week, and understand that if we get above that level, that's going to be more bullish. So let's take a look at the hourly chart here and see if we can find any clues from its price action here. This is the level off the weekly chart between the 96.62 and 97.08 level. And on Wednesday, when the price moved above that, back above that level, we came down and we did fall below the 100-hour moving average here on Thursday's trade, only to find that the market couldn't go any lower. We kind of came back to this old high from Tuesday's trade and found support against that level and started to see more momentum in the direction of the upside here. Got above the 200-hour moving average in Thursday's trade, moving up to through the 38.2% retracement and toward the 50% retracement through here in trading here today, or on Friday's trade, I should say, but found sellers against that level. Admittedly, we fell back below the 200-hour moving average, which wasn't a good play from a technical perspective. We also moved below these highs through here, which also wasn't a good play from a technical perspective. It was Friday, it was month end, it was weekend, it was quarter end, so I'll blame it to that. But we did see a rally into the close, and we moved up to this swing area through here between the 98.0905 level. It looks like a 98.11 level, and that's where the market's kind of going off. In the new trading week, from a technical perspective, I want to see the price stay above the 200-hour moving average, not do this stuff down here, and that level also corresponds with these highs through here. So we want to see the 97.49 level in the short term hold support. That would give the buyers more oomph, if you will, to the upside and get the price above this 50% retracement and above this swing area, which again was an area of interest going back to September 5th, September 6th, September 7th. And then if we go back to our daily chart, it's near these low levels right through here and above the 38.2% retracement of this move to the downside. So those are the targets on the top side here for the euro versus US dollar. And the downside, the risk is the 200-hour moving average. If we move below that level, we'll be looking again toward the key swing level from our weekly chart down between 0.9662 and 0.9708. If we move below that level and the 100-hour moving average, all bets are off. We're moving back to the downside for the euro versus US dollar. But going into the weekend, things are looking a little bit more corrective in the pair with more work to do on the top side. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.